Hello, everybody. I'm Paul Hefner, and today I'm going to be talking about the PPP2 applications and forgiveness and a bunch of things around there. I'm going to share my screen and walk through a few slides. So here's a little bit about my background. I'm basically the owner of a CPA, CFO, and bookkeeping firm. You can pause it if you want to read more about my background. Let's see. So here's the criteria for PPP2. The biggest change is this one has some specific criteria around revenue dropping. And this is the biggest question we're getting right now is sort of how to calculate this 25% drop in revenue. And so right now there's no guidance on cash or accrual accounting. So what we've been doing for our clients is running both and sort of seeing what the difference is. And then we are also thinking through how that company is filing their taxes. There may be some criteria based on having to show that drop based on your tax returns. So if you're on cash accounting for tax returns, like most small businesses are, you might want to just double check what your cash percentage is. But either way, I think it'd be fine to apply, even if you're accrual accounting was showing a 25% drop. A lot of times the cash one has more variability, especially if people were not paying because of paying slower during the actual deepest part of the pandemic. So they might have paid slower. So your cash payments in Q2, for example, might have dropped a bunch, which is sort of the most common quarter that we're seeing where people have been able to hit that criteria. The actual formula is basically you take your whatever quarter you're looking at. So for Q1, you would do Q1 2020 minus Q1 2019, and then you would put parentheses around that formula, and then you would divide it by the Q1 2019 to get your percentage. And you can multiply it by 100, or you can just convert the cell to percentages, and it'll do it for you. And then I would drag that formula. If you have what we're typically doing is running the accrual and cash books by quarter, that report, the P&L, profit loss statement, and then we're just dragging that formula across, and then we're doing a different formula for the entire year, where we're basically summing the entire 2020 and then subtracting the entire 2019. Anyway, so that's a lot around the 25% drop in revenue. If you have questions, feel free to reach out, but that's probably the biggest change and biggest sort of difference where there's actually a sort of calculation on it. Some other criteria is less than 300 employees. Another one is because basically they're trying to make this for smaller businesses. You've already obtained a PPP1 loan and have plans to use it. You must have been in operation on February 15th, so you can't be a new business. Not publicly traded or associated with China. There's a bunch of sort of things around the China piece. And the application deadline is March 31st. So the next piece is how much can you borrow? So it's very similar to PPP1 for most businesses. It's 2.5 times the monthly payroll. For specific businesses like motels and restaurants, they can borrow 3.5, and then the maximum is 2 million, which is a little less than the 10 million. So all these things make it, hopefully a little easier or less of a risk for running out of PPP2 money before you apply. We can talk about that in a second. So the forgiveness criteria is very similar to PPP1. 60% has to be on payroll. There's a 100K cap for people that make more than that. Then the big change is the 40% on the other can be spent on a few other things. They've added in some software, computing, accounting services, which I'm excited about, being an accountant. Repair cost, if you had any looting or vandalism during the 2020 sort of disturbance, you can get those covered. Essential goods, and both perishable and other types can be forgiven. And then any sort of protective equipment or facility expenses that you had basically due to COVID, you can get those reimbursed as well. Very similar to last time, you can use an 8-week or 24-week forgiveness period. We're recommending most use a 24-week, which is a little different knowing that there's 24 weeks versus 8 weeks, I think we're encouraging businesses to be a little smarter with how they spend their PPP2 money this time. I think that there was such a rush to make sure you got forgiveness on 8 weeks that people were sort of maybe, I wouldn't say spending extra, but there was definitely a lot more emphasis around trying to get forgiveness and maybe giving employees bonuses or doing different hings or trying to do whatever you could to hit it all in those 8 weeks. And now with 24 weeks, you can sort of take your time and most, based on the 2.5 criteria, 2.5 months of payroll, that should more than cover the 24 weeks. Then there's also a new PPP1 forgiveness form coming out at the end of the month that should make it super easy to apply for PPP1 forgiveness if you haven't done that yet. There's no rules around PPP2 around having applied for forgiveness on PPP1 or anything else like that. So that's it. I'll put some notes in the links and the notes in case you want to link back and see these slides, or have any questions, you can reach out to us. So thanks. Have a great day, and let us know if you have any questions.